BNPL, or buy now, pay later, has grown significantly over the last few years, and not just in the US, but globally. And it's helped contribute to consumer debt, with some consumers having 10 or more BNPL payments at one time, making purchases for large things like a television or furniture, but also for small items like groceries and gas. And it's very convenient. And in some ways, it's a good money management tool because, unlike a credit card or some other loan or credit line of credit products, you make a purchase today and you pay it off over four or some number of equal installments. So that way, you're not just carrying on the debt by a credit card maybe only making the minimum payment. But BNPL is still debt. And that's one of the problems with BNPL for some consumers, is that it's not helping them to manage their money at all. It's not only used in an emergency, but it's also used in non-emergencies to buy things that you might not otherwise purchase. And as consumers begin to max out their debt with credit card and mortgage and BNPL and other forms of credit, it really starts to weigh on their ability not only to take on more credit or make more purchases, but also to pay for the debt that they've already taken on. And we're already starting to see this, and BNPL is definitely a part of this. Consumers are starting to become more delinquent and return to what we call pre-pandemic levels of normal delinquency and collection rates. So delinquencies, 30 days late, 60 days late, those are ticking up. Collections accounts are ticking up. People are having trouble paying their bills. All of that added together means not only that the cost of borrowing money, including BNPL loans, is going to go up, but banks and lenders are probably going to be less likely to loan money because they're going to see delinquencies go up, and late payments indicate that somebody might not pay them back. And nobody wants to loan to somebody who's not going to pay them back. And BNPL loans can get people in trouble too. Imagine that you notice that your television is not as big as you would like, and maybe it's not as many pixels as you want, and you want something that's a little bit better. And so you go and you buy a new television and you pay, I don't know, $1,000 for that. But you use a BNPL loan that you pay off in equal installments over 4 months. A month later, you realize, well, my couch is not that nice and it doesn't match my television, so I need a new couch. You go to the furniture store and you buy a new couch, and it's $2,000, and you get a BNPL loan for that you're going to pay in 4 months. You put the new couch in place, you love it, you realize that you need some throw pillows because it's just boring by itself. So you go to the store and you get a BNPL loan for $50 worth of throw pillows. You put those on the couch, everything looks wonderful. You're watching TV, you're leaning against your pillows, you're very comfortable. But you realize that your end tables are kind of old. So you go back to the furniture store, you get a new BNPL loan for $250, $300 for new end tables, and you put those in place. You notice that the coffee table is now kind of ugly because it doesn't match anything else. Everything is new, and so you need a new coffee table. So you go to the furniture store, you get a new coffee table, you pay for it with BNPL loan, and then you get home, you put it in place, and you realize that the rug underneath it is kind of tacky. It doesn't match the coffee table or the pillows or the couch or the side tables or even the television. So you go and you buy a rug, and then you get home. The room is a different color than all of these items. So you go to a store and you buy paint, and you pay for that paint with a BNPL loan. And suddenly you have 6 or 7 BNPL loans that you're paying off. And then your car breaks down and you realize you need a new car, but you have like 6 BNPL loans. You can't buy a car with a BNPL loan. At least I don't think you can. You can't get any credit because maybe you have poor credit, or maybe the lender sees that you're maxed out on BNPL loans and they don't want to lend to you. And so what do? You have to go visit a guy named Sal in an alleyway who will give you the money for the new car, but you better pay him back with interest, and really high interest, because he's dangerous. And all of that is because you wanted to just go buy a new television for $1,000. And the fact of the matter is that you probably didn't need that television anyways. So what's a better alternative? Save now, buy later. SNBL, also called SNPL, save now, pay later. You want a $1,000 television? Okay, fine. You open an SNBL account, you pick the store that you want to shop at, you save towards the goal. That store might even give you an incentive for choosing them, over how many ever months that you or weeks that you save for that goal, you have time to think about it. And you know what? By the end of the 3, 4 months, however long you needed to save for that goal, you might decide that you don't need it. Or your car may break down and now you have to take that money out to fix the car. I mean, there's a lot of benefits to delaying that purchase so that you're not suddenly finding yourself in an alleyway talking to some guy named Sal who has 3 or 4 guys around him, and he's letting you know that if you don't pay, you're going to get a visit and you're not going to like that visit. And now suddenly you're in trouble. So BNPL versus SNBL, financially speaking, the better choice is probably SNBL. Look, if you're still watching this, then that means that you either fell asleep or you liked what you saw. Either way, you need to subscribe. So I think there's a button around here somewhere. Click that button, subscribe, so you'll be notified when I publish new videos. Stay in touch. Until next time, this is David Shipper, and I don't know.